Ajay Bagga joins in on the conversation this morning. Market expert. Ajay, always great to speak with you, and thank you so much for your time to us this morning on NDTV Profit. Just to get a recap of everything happening globally first, let's start there because that's something you track so closely. The Moody is downgrade for US credit rating and the impact that it's had on the 30-year. How do you see that panning out?
Rating agencies are largely irrelevant and they lack credibility, Tamanna. The first rating agency to cut the AAA for US did that in 2011. So what were Fitch and Moody's doing for the last 12 years? In the case of Fitch, it reduced the US rating in 2023. And now we see Moody's coming by after giving a negative outlook last year. So largely the market has discounted it because S&P had cut it in 2011. What happens post the rating cut? Normally there is a bit of a market reaction for a couple of days, and then it's business as usual. The exorbitant privilege that the dollar enjoys in the world as the reserve currency is what is helping the US by despite running a 6.4% fiscal deficit. As the largest economy in the world, to run a 6.4% deficit, fiscal deficit, and then to have more than $1 trillion as payout every year in terms of interest outgoes, running a fiscal deficit of absolute number of about $1.8 trillion. It would not have been possible for any other country in the world except for the reserve currency home base, where they have the exorbitant privilege to print as much as they want. So that's a well-known fact for the markets. It's discounted in. And post 2011, both the sovereigns and the banks changed their investment playbook to allow them to invest in AA plus or AA1 rated instruments so that the US Treasury safe haven status stayed intact. There was the expected attacks on the rating agencies by the White House as well as the Treasury Department. Scott Bessent called it a lagging indicator. It is a lagging indicator, and this time around, it is a 14-year lagging indicator. So these agencies had lost a lot of credibility post 2008, and to even give a AA plus or AA1 in the case of Moody's to the US with such broken government finances, it just shows that a lot more goes into these ratings.
So what do you think would be the credible rating in that case? What would be the realistic assessment of the US economy? Because that is the core question, isn't it?
Yeah, you're spending $6 trillion and you're earning $4.2 trillion. You're adding in $5.9 trillion more over the next 10 years with these latest tax cuts, which just got passed by the Republican caucus yesterday. Now it will just, it's a breeze to go through the US Congress. When you did that in 2017, there was expectation that revenues would rise with these tax cuts. Rather, you ended up spending nearly $2 trillion more over the last 7 years. You didn't get excess of revenues over the tax cuts, and that's a continuum since the time Ronald Reagan first cut taxes to get out of the recession which the Volcker shock had gotten in 1983. Since then, whenever taxes have been cut, even the Democrats are not able to raise back the taxes. So a country which is earning 4.2 is spending 6 trillion plus, is putting tariffs on top of it on global trade of at least 10%, which takes you back to 1971, if not to the 1940s. Where do you rate that? I would leave that. I'm not needed to be a credit rating agency, but I don't agree with these lofty ratings that the US enjoys. And a country like India, which pays up all its debt, which is always prompt on all its payments, is still at the lowest rung
Yeah.
of investment
Yeah,
grade.
it's a fair point. And speaking of countries that are rated highest at this point, Ajay, it's a dwindling list, but there are 10, and among them, Luxembourg is now rated higher than the United States of America. But having said that, I do want to ask, and the numbers that you were pointing out with regard to the latest tax bill, we're talking about now debt of $42+ trillion that is going to be added up for the United States. I'm just wondering whether there are going to be takers for this additional debt. Of course there will, but is that something that people will think twice about? You have yields that are at 5% on the 30-year and 4.5% or thereabouts for the 10-year. There are better opportunities, in your opinion, globally? People have gone towards gold as well?
Those are very small. For you to go into, say, the Swiss franc, there is very little leeway. Absorption capacity is very low. Yen is overowned already. So you come back to the US. Euro, about some amounts are going into the euro, but the euro has Spain, Greece, and it has Germany and France. So which euro are you really buying? If there was a Deutsche Mark or a French franc, you could have had more options available. Today, you don't have that. Sterling pound, not much of traction there. The Swiss franc 2-year paper is already in negative yields because of this excess of demand. So the Swiss central bank is charging you to allow you to hold its bond. So it comes back to the US. This will keep on working till it stops working. That's how it works. So right now, there is just no alternative. You have $33 trillion of global savings that are sitting in the US stocks and bond markets because people feel there is no alternative. The Chinese are withdrawing about 20 billion a month. They don't want to rock the boat. They've come down from number 1 to number 3 in terms of treasury holders. Everybody's buying gold, but gold has limited capacity to absorb as well. That's a well-known case. So there is a gold buying where central banks 10 years, 15 years back used to buy about 200 tons of gold a year. Now they're buying 1,000 ton. They bought for the last 3 years, 1,000 ton plus has been bought. More gold will be bought, but the capacity is not there in the gold. Will there be a digital global currency which will emerge as a reserve currency? The US will ensure that doesn't happen. That's why they're not very keen on a digital dollar because that could assume a global, a form of itself. And this is very good to have this exorbitant privilege and continue with this.
All right. Thank you for that, Ajay. Always a pleasure to have you on.